The Nasdaq 100, the S&P 500, absolutely doing it. We had a little bit of chop day, a little bit of indecision, but I'm telling you right now, it's looking like we're set for this continuation. Now, we had CPI this morning. We can go over that data. And I'm going to tell you right now, everyone's going to be like, look, was CPI actually that good? Was this actually that beneficial? Now, again, what I'm going to continue to say, the numbers. Okay, that's what we're looking at. Specifically data points. So that's what the Fed is following. And I'm going to tell you right now, based on what the Fed said at their last meeting, based on the data that we're getting here, I think you have to be looking for the upside move here. Also, too, the debt ceiling. We talked a little bit about that yesterday. In my opinion, very unlikely that we're going to default based on the tone from McConnell. What happened, yesterday, what we talked about there. And then today, he said they made good, overall pushing. They're doing very well with it. It's also worth mentioning the Democrats over in the Congress also voted to pass for it. So it's not just the Senate. It's not just, the Republicans. It's both sides doing it right now. So we need to identify what's happening there. Now, is that saying that Joe Biden won't veto it and do X, Y, and Z? I don't know. I can't give you the exact answer. But right now, things are set for continuation, stair-stepping. Now, looking at the CPI numbers, okay, what's happening here? A lot of people were commenting yesterday saying, Tyler, when we look at the gas and oil and what's happening with energy, that should be pushing CPI up. Well, oil, once again, benefited you towards the downside. We talked about that, what to expect there. So looking at pure based on the numbers generated here, I don't think there's a lot of cause for concern. However, what I will say is that inflation's still sticky. I think that there's still inherently a problem there. And eventually it has to start actually dropping on the core side of things. But as of right now, you met expectations. What was expected hit. Regular CPI year over year actually came out with a beat. That was good news there. Like it, hate it, whatever you want to say, it is what it is. Now, before we jump into the charts, I have to ask you to do two things. Consider liking and subscribing. I try to give you the fundamentals and the technicals every single day and tell you about stock plays that I'm liking as well. And if you are interested in getting involved in Discord, understanding how we trade, why we trade, just getting around people that are going to help you succeed along the way, getting 1% better every single day. This is not necessarily a signal service. So I never want you to go into something saying, if I follow Tyler, I'm going to get rich. That's very a terrible analogy and idea. And I don't think signals really work. Now, giving you a for instance, and that being said, with some of the trades from myself today, I only took one and I've been very passive. Today, I took for instance, and literally onto the T. Apple got in calls when you started bouncing. You got above the level I was watching. You got in around 218, 220. It went right to my target as mentioned right there. And these were up about 30% by the, within the next hour and a half, give or take. That was the only trade, right? I practice a lot of patience and I only post what I trade, right? That's a big thing for me. I don't post stuff if I'm not trading it. So I like to be as transparent as possible there. Now, when we get back in, let's talk about where we're at and how we're moving. Okay, so this is the daily chart on Nasdaq. Okay, and if you look at the Nasdaq for essentially the past month and a half, you are in an ascending triangle. This is a bullish continuation pattern. Okay, we need to identify that first. So what does this really mean here on the Nasdaq? It means you're making higher lows. You're basically hitting a brick wall, basically 13.3, 13.3, 5-ish, and that's how we've been moving. Now we're looking to close the day above this, which is expected. But what happened this morning? And I want to use this as an example so you guys have the tools at your disposal. So this morning we pushed up from that CPI news immediately into a round right here, 13.417. Now I say this because I really encourage you guys and I want you to take advantage. I think sometimes we have come to this conclusion that you have to be on Discord, you have to pay to get content. Not at this channel. If you look and you go down below the newsletter, you can also go to our website. The newsletter is absolutely free. This isn't even this week's. This because this week's, and it only comes to the website at the end of the week when the next one is released. But this is actually almost 2 weeks old now. We mentioned the same level. Okay, this is literally the same level right here. You can see 13.419. What did we say was going to happen? If you mount and push above 13.348, buyers will manage to break this and sustain at this level. Keep an eye out for potential upward movement at 13.419 and then 13.542. To the tick almost. You pushed above, you tried to mount it, and you pushed back below. That was your level all day long. And right now at the end of the day, you're ending there as well. So we're ending at the resistance. You want to see a little bit if we can get a bit above this, but we have PPI coming out tomorrow, some more inflation data. Now, that's where we're at so far. I still think you look good. Now, if we look at an overall viewpoint of the market too, of something like ES, and we look at what's happening with the S&P 500, I think today you saw a lot more downside on the S&P and the Dow. Okay, a lot of potential downside there. And if you're watching and trying to trade the S&P right now, I'm going to tell you the level to be watching is roughly 13 or 41.38, about right here. And if I come into something like the 5-minute intraday, you can see that line right there. This is your line in the sand. If you get below this level and you hold, you play the downside. If you stay above this level, then you trade it to the upside, ES, SPY, etc. Right? So looking at that. Going into Dow, this is where you saw a lot of your pain, really pushing down. Lower lows were established here, at least on the intraday chart here. So it's worth mentioning. But also too, I am going to highlight this. You're not going to like it. You're going to get a little upset, but I got to do it. Potential inverse head and shoulders forming out here on the 4-hour chart. Gonna tell you again, you're not gonna like it. I know people. I don't know why everyone hates the upside thesis, or like the potential of moving up. People, I guess, are like they just really want to try to catch the next bottom and then not buy it and then complain once again, because it seems like that's kind of the trend that's going on. Is everyone's mad that they didn't catch the bottom? But if you look at what's happening here, and we just give you a quick visual, possible area that you're getting right there. I'm just gonna say it. If this actually plays out, you could absolutely erupt. You need to understand why, because the Dow is coming into a very significant level. Going into the daily chart, you can see this level right here around 13.4 has been a brick wall. And going back over to TrendSpider, giving you a better view, you go to something like the daily chart, you can see here, this has been huge. A lot of rejections going all the way back since last April, okay? Massive, massive level. So the possibility of this actually playing out, and you can even see a little bit better here on like the daily chart of how this is actually trying to form out as well. Going back over here, it's kind of funny how this is forming out here. You can see on the 4-hour, you have one establishing there, and then you also have it trying to establish here. So you bounced off the 200 SMA, you got back above, you're holding, and you're holding here. You didn't get quite the dip that you wanted right here, but you still look very, very strong. So it's a little bit more of a complex head and shoulders, but it's inverse head and shoulders, but it still looks extremely, extremely strong with the potential to break back to the upside. So again, don't shoot the messenger. The Dow, ES, Nasdaq, they all look very interesting. ES is probably the one most in the middle. You're not necessarily extremely bullish on ES until you get above around 4,200. That's the main level to watch there. Nasdaq, as long as you hold above this 13.35 range, I think you're strong. I think you're trying to break out, push to 13.7. That's my target over the next 2 weeks, basically here on Nasdaq. Tech has the momentum. It is what it is. Tomorrow morning, just so you know, though, you do have PPI, so be prepared for that. Now, really quick, let's go over some of the underlying things we need to be talking about. VIX. Again, VIX, you're back down here, $16, $17. It's worth mentioning. Everyone's like, VIX is low, VIX is low. Well, sometimes we ignore what this really means. When VIX is trending at these $16, $17 levels, what was happening back in 2021? Like, where was the market moving? Let's really understand that. When you were just trending at lows, you were pushing new highs over and over and over on SPY and Nasdaq, just stair stepping up and up and up. It's important to realize when you're down here, you have the most room to run on the Nasdaq, okay? And on the SPY. You have to understand that. So when we're down here, I do believe it's possible you're setting up for another push on ES and a break above 4,200. Now, I will say, if you're going heavy to the long side, having VIX, VXX calls could be a very good opportunity to hedge your position and your account. I'm just saying, not financial advice, do your own DD, but we've seen some of the wicks you've gotten here. We went from 16 all the way up to 21. Very quickly, right? So understand that. Don't just go naked into positions, YOLOing to the moon on short dated options. Have an overall plan there. You need to understand that. Going into oil, this is one of the downside things that we had kind of happening today, right? So oil, you came out this morning, you started pushing down. Now we look at oil and everyone kept saying, well, Tyler, I don't really understand what's happening here with oil, right? Isn't oil going up? Yes, you pushed up last month, you hit the 200 and you came right back down. For a large portion of the month, though, you were what? You were down. You were below the overall, bottom in that zone that we were trading in. We talked heavily about this yesterday as well. This is kind of how you're trading. And typically oil moves in a sideways pattern. If you look at healthy markets, that's what happens. You can see right here, you can see going back for, month-long periods of time, you trend in a sideways moving action. That is healthy market movement on oil. You do not want to just be going straight up or straight down. That is not healthy. And so the fact that you're kind of finding this range is interesting. And we also look at what's happening with OPEC and the Sauds and what they're doing and how they're releasing, a lot of oil to the market right now. Very, very interesting, because right now it's looked at a very big money grab when it comes to this specific space. And right now, those people are making as much money as possible, especially when it looks at Chinese demand and what's happening with Russia as well. So again, nothing really crazy here, just sideways movement, but you're really operating at the bottom of this range. And you saw a lot of downside on stocks, specifically in the oil sector today, especially this morning. I mean, look at the daily candle of something like Exxon, right? One of the best names in oil. All day today, you were just, dipping to the downside. Look at CVX, dipping to the downside. Oxy, again, dipping to the downside, preparing for more downside potentially here, right? So oil names got a lot of that downside pressure today. The other thing to look at, XLF, the bank sector. Now, we did see some initial downside today, but I think XLF can start recovering quick. I think this is something that we need to be watching for. If XLF starts to recover, which it should if we lean towards a pause, the more we lean towards a pause, the healthier yields will move in a beneficial way for these banks to move back up. And if that happens, I do believe banks will recover. And if banks recover, we will see a nasty upside move on SPY. Banks, XLF specifically, are one of the biggest sectors holding down the SPY. In my opinion, if XLF wasn't at these levels and the bank crisis didn't happen, SPY would be well above 4,300 already. Personal opinion. Don't attack me. It is what it is, but that's where we're at right now. So when we look at that, be a little bit careful. The next few things I do want to talk about, also the DXY, the dollar, a lot of discussions, a lot of people having questions here. Again, I'm going to try to cover this more frequently. I know you guys have a lot of questions about the dollar, but again, the dollar still looks extremely weak. It looks like it's operating sideways, getting ready to break down once again, almost like a little bit of a descending triangle here, like on the daily when you get, this is the weekly, but on the daily, it looks very weak towards the downside. So again, I don't like the dollar. It looks very weak, which gives me more incentive to believe more upside opportunity going into something like gold, XAU, USD. You can still see you're operating near these highs. I would not be going long here until you at least break all-time highs. You're operating within $30, $40 of that range. It makes no sense, and I think you're at risk of potentially buying the top. Be careful. It is what it is. The safer alternative is silver. Silver does have potential, and you have a lot of calls and a lot of aggressive buying. You have a lot of aggressive buyers on silver. I think silver has potential to start ripping, and I think you have that upside opportunity here. Even getting to all-time highs is 51, and you're only at 25. So you have a lot more range here. Even to local highs back to 29, 30, you still look really good. And this happened, back in 2021. We all remember that push, that really aggressive volatile move we had there as well. Now, the last things I want to cover here before we get into some stocks I'm liking are yields. Again, what did we say about yields? How were they moving? What was the big news here? Is in my opinion, you're flagging across the board. We've been talking about this. This is the 2-year yield. It looks like it wants more downside. The 5-year yield, it looks like it wants more downside, operating below 200 SMA. The 10-year yield, the same exact thing. The 30-year yield looks the healthiest. Again, I try to repeat the same things so we can learn from them, right? If we are constantly switching our focus and, switching strategies and focusing on different things, we're going to get confused, and we're not going to really hone in on what gives us our edge and what is really giving us insight into what's moving the market or how to understand movement in the market. And so when we look at yields, they are also respecting and doing what we thought they would if CPI came out beneficial. Why would yields be going down? If there's an expectation that rates will get paused or slow down overall. And that looks like what we're going to try to do. And again, if you're looking at the CPI numbers and you're expecting them to, they got to fight inflation more. Again, the Fed said yesterday, the rates aren't going to immediately impact the market. They're doing what we want them to do. But the next step is to attack credit ratings and get, credit rates a little bit higher for consumers. They've already done enough to businesses. Businesses are already showing the turmoil and the slowdown there. Now it's up to the consumer to get hit, and that's what they're planning to do with what they're doing with rates. That's the focus there. Okay, now what we're looking at here, specifically, some names I'm liking. Let's go through them really quick. Actually, let's go through here. And as you break up through this, you look really good. Apple, in my opinion, I think it's a must watch right now. It's one of the best looking names there is. keep it on your radar. Apple, I'm going to tell you right now, your target is roughly right about here. Let me mark it out really quick. Right about there, 176, 177. You have about $2.50 of upside opportunity. If you can break and hold above 173.9, 173.8, I believe you'll push. This has kind of been the range that I've been watching right about here, and we keep getting rejected. That was my target also today. And giving you a visual, I literally said it, going into what time was this? I'm trying to see, 1:15, right when I got off live earlier. We got above it. That was my target right there. We came almost to a T. We hit it. We dropped back down. I still like where buyers are showing up, but I had to get out because I don't want to hold this overnight. I love the upside opportunity. Watch them here. Microsoft, we've been talking about these guys. It seems like every single day Microsoft releases new news when it comes to AI and what they're doing here. What did we also say here? Microsoft is operating in a clear bull flag. It continues to do it. Continues. The 4 hour, you're clearly holding above the 90 MA as well. Upside into 315, 315.5, you still like it. Once you get there, you need to start paying more attention and being a little bit careful. Today, we said AMD. What did we mention yesterday? AMD's target. We said, where were you going to go? $99 to $100. You hit it perfectly today. So it makes sense you're getting a little bit of a slowdown. But I do believe semiconductors are still very strong. If you can get the hold on Nasdaq, which I think you're going to get more buying pressure going into tomorrow if PPI performs well, which it should, but we'll see. Don't want to speak too soon. I believe semiconductors have more room to go. And I think AMD, once it gets above 100, you have a lot of room we're talking about there as well. Understand that. Going into something like Tesla. Now, Tesla, I wasn't a huge fan today. I really wasn't. You had a really nice push. We gapped up. We hit, 174. Awesome. You came back down. Now, Tesla, what I will say here, though, is you're doing very similar things to what you were doing back here. Now, the inverse head and shoulders is still here. You're still formed out here. But remember when things were getting kind of tricky here? But the thing that told us that this inverse head and shoulder was still in play was the fact that you were making higher lows, higher lows, higher lows, higher lows. And you're doing the same thing here. Okay, we have to be able to identify, ultimately what's happening here. You are making these higher lows. Whether you like it or not, you're still making them, right? You can still see higher lows are being established. So I still like that. As long as you're above 166.5, 167, you have to be expecting that upside push. I wouldn't be super aggressive here, but I still like Tesla. You still obviously have room to that gap fill at least to 176.2, and then you have 177 on the gap as well, and then you have another one. I think this is the same gap. Yep, this is the same one. 177.7 is where the gap does get filled there. So still looks good. We like it. Upside opportunity. Next up, Amazon. Now, I mentioned this play yesterday in Discord as well, and then Jay actually ended up buying it as well. So let me show you. So when we look at Amazon, one of the things that we were looking at was how to get more bang for our buck here, right? We wanted to go long-term into Amazon, and I keep saying Amazon and Google are the better long-term names because they're so cheap compared to where their 52 or where their all-time highs are, right? So what Jay did, and we talked about this, is he bought a 2025 January call, right, with the 110s for $21. For instance, what I bought is I got mine a little bit closer, and I posted a picture, I believe. I want to make sure it's right here. I'm trying to find it real quick so I can see it. I want to give you an exact answer of what I was looking at. So I like the ones in the money at 105. They're a little bit more 23.5, right? That contract, when you were at 129 previously, going back to like November and October, that position was over $40. I believe roughly $45. So even if you get back to 125-ish, that contract will push back there. Now, this also has 2 years on the contract, or a year and a half at least. So we're not going to really get killed. It's more of a leveraged stock position for myself. That's a way to think about it. So I grabbed a few of these. So instead of buying, for instance, $10,000 worth of stock, I went specifically into an in the money option over a year out. I love them. They move very good. And if you want to get more information on this, just take a quick look at how in the money options move for like 6 to 12 months out. You'll be astounded to look. When you look at something like NVIDIA, those contracts are up over like 8x. And we talked about those in Discord as well. AMD, all of those. We talked heavily about those in the beginning of the year as well, if you do remember. So those are the stocks I'm liking. That's what I'm looking at in the market. If you have questions, leave them down below. More is coming out, and giving you a visual too here on Bookmap before I let you out as well. We go into here and you can actually see you started getting another big order here near the end of the day, 3,000 lots. Big fan of what you're seeing here. Besides that, it was a very cool day, nothing crazy happening. No big icebergs were bought, but overall you saw the action really and the buyers really kick up as you moved on throughout the day. We also saw volume definitely ramp up as well, which is something that we're very interested in. You were at 50 million at around noon. You had a lot, most of your pressure and your volume this morning came between the first hour and 30 minutes of trading, and then at around 1 to the power hours where a lot more of your volume came. So it was predominantly from buyers, in my opinion, when I look at how we moved and when we moved. So we still look really good. We look very strong. I like the upside opportunity. PPI tomorrow. Keep your head on a swivel. We love the upside. Have a good one, traders.